Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. And today we'll be talking about quite a good number of things happening in the markets, with a key focus on the current broad market sell-off that is currently affecting the tech sector, specifically the stocks in the AI sector. We'll also be talking about the current sell-off happening in indices, gold, as well as crypto. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. Remember that this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So good morning, Smith FX. I can see you already joined. Thank you for being the first join and comment. And see more people are joining in. So let's get things started. All right. Let's continue and see Simon Gitonga in the house. Can see Lucy Njoki in the house. Thank you guys for joining. So let's continue. So from the very first website on display, this is Trading Economics. It basically gives you a summary of what has been happening in equities. So in the equities market, if you look at the major indices representing different economies, you can see the story of the week. So for instance, if you look at the SP 500, which is the benchmark index for the US stock market, you'd notice that currently it's down 0.42% today. And since yesterday, that is for the week, that's a 2.95% drop, and monthly 1.34% drop. However, year to date, that is since the year started, the index is still up 12.97%. And compared to the same period last year, it's up 12.3%. So you do the same. You look at the Dow Jones. You notice for the week, it's down 3%. The NASDAQ, 3.43%. The Nikkei 225 index, the benchmark index for Japan, is down 4.24%. The UK 100, it's down 1.14%. The German 40, 3.54%, and many more. So you move to France, 1.79% for the CAC 40. Italy's index is down 3.33%. Spain's index 2.81%. Australia's benchmark index is down 4%. Shanghai, China 1.56%. India Sensex is the only one among the top economies that is up 1.17%. You look at the TSX in Canada, it's down 0.79%. MOEX in Russia, it's down 7.87%. And of course, the Ibovespa from Brazil is up 8.64%. So clearly, among the major economies, majority of the indices are on a sell-off. So it's only, I would say, Brazil and India where you can see the indices on the rise. But for the rest of the major economies, all we are seeing is a big sell-off. So what could have caused this sell-off? What is causing this sell-off? And how can you trade to take advantage of this? So that's only one update happening in the indices side. So you move on to this other side of crypto, you'll notice that it's a bloodbath, basically a wide market sell-off. With Bitcoin this morning hitting $89,000, which is down about 29% from a recent high. So in the last 7 days, you notice that Bitcoin is down 13.64%. You look at Ethereum 14%, XRP 11%, BNB 6%, Solana 16%, Tron 3%, Doge 12%, Cardano 19%. And you can see the whole story. It's basically a broad market sell-off, with most of the cryptocurrencies being double digits, ranging from around 9 to 20%. So clearly, something is definitely happening in the market, and it looks like a broad market sell-off. So you look at the fear and greed index right here, you'll notice that we are almost getting into extreme fear. So remember, as always, the values around extreme fear across the broader market basically indicate areas of maximum opportunity. So when the market is in extreme fear, it basically means that a lot of assets have been in a sell-off. And if you're able to allocate your assets and your trades effectively, you're able to benefit when the market eventually bounces. So what else is happening in the markets? If you look at the SP500 stocks and how they performed as per yesterday, you'd notice that the majority of them were on a sell-off. So among the big tech, it's only Google that was up 3.12%, and Tesla that was up 1.13%. All the major big tech companies were in a negative, including Apple, which was down 1.82%, Nvidia 1.88%, and many others, Microsoft being down 0.53%. But then looking across board, you notice like semiconductors, they were all in a sell-off. You look at the financials and the banking sector, you notice that they were all in a sell-off, credit services, insurance, capital markets. You look at asset management companies, they were all in a sell-off, somewhere on an average 3 to 4%. Financial data, banks, insurance, property and casualty, insurance brokers were slightly higher. But then you look at life insurance companies also in a sell-off. You look at other sectors, for instance, you look at the energy sector, oil and gas exploration, all in a sell-off. Oil and gas is exploration and production also in a sell-off. Midstream, you look at marketing, oil, gas refining and marketing. It was a big sell-off across board. You look at this other side of consumer cyclicals, travel services, or in a sell-off. So it was a big bad in the stock market, but you can feel it more in the crypto sector, which is more volatile. So there have been several explanations by various analysts. Some of them are trying to blame it on Japan. Others are blaming it on the tech AI sell-off. But what it looks like, in my opinion, is some level of profit taking happening as we approach the month of December. So we know that the stock market has been on a very strong rally since the April 2 lows. Remember the April 2 Liberation Day tariffs, when the market had a big sell-off, but once the tariffs were announced, the market made a very strong recovery. And some indices are up like 30, 40, 50, 60% from there. And of course, at some point, we expected to see some form of profit taking. So that is what is most likely happening. And profit taking leads to what we call a stock market correction for a bit. But then eventually the market recovers. So for the month, what we have seen is the Japanese yen being the biggest loser, down 2.81% against the dollar. The UK pound 1.89% down against the dollar. New Zealand dollar down 1.02% against the USD, Euro 0.41%, Swiss franc 0.19%, and Canadian dollar 0.17% against the USD. Whereas the Australian dollar is the only one that had a slight edge of 0.07% against the USD for the last month. So you look at the week. Since the week opened, the weakest currency has been the Australian dollar, down 0.60%, closely followed by the yen. is down 0.29%, Swiss franc 0.21%, whereas the dollar has been the strongest currency since the week started. And for today, you can see that these currencies are making a recovery against the USD. So the New Zealand dollar up 0.19%. All of them, it's a slight gain against the USD, but overall, the USD seems to be the weakest currency in the market right now. So also, looking at the futures market, um, this is the performance over the month. Whenever you see the volatility index, which is a measure of 30-day SP 500 futures volatility, when it's up 3.63%, it usually spells trouble for the stock market. And that may explain why we are seeing negatives on the Dow Jones, SP 500, and the Nasdaq, as well as the Russell 2000 mid-cap stocks in the US. So you look at other stock markets like the Nikkei, Euro stocks, the German DAX, they are in the red. You look at crude oil, Brent, gasoline, heating oil. It's only heating oil that seems to be in the positive among the energy futures. Then you look at agriculture, cocoa, cotton, orange juice. Coffee is slightly up 1%, but lumber, sugar, you can tell the whole story that a majority of the agricultural commodities are also down. You look at precious metals from gold, silver, platinum, copper, palladium, they are all in the negative, whereas live cattle and feeder cattle and lean hogs are actually in the green. So other agricultural commodities seems to be doing well, ranging from soybeans, soy meal, soybean oil, corn, wheat, rough rice, oats, canola. They seem to be doing quite well. Then on the currency side, you'll notice that all these currencies have gained against the USD in the futures markets. So while the USD is down 0.15%, the euro, yen, pound, Canadian dollar, Swiss franc, and Australian dollar seems to be doing well. But Bitcoin is down 0.83% against the USD. So clearly, not the best of days to be looking for buy opportunities. But then we are seeing some kind of shifts happening after we just got into the London session, and there seems to be some good things playing out. So then you look at the bonds markets, you notice that bond yields have been increasing. So for US bond yields, 30-year bond, they're up 0.16%, 10-year bond 0.17%, 5-year note 0.14%, and 2-year note 0.06%. So while this might seem like a small change in the bond market, the Japanese bond market tells a completely different story. So trying to find Japan's 10-year bonds. So this is it. Japan's 10-year government bond yield climbed above 1.75%, nearing levels last seen in the year 2007 as investors weighed the impact of potential large-scale fiscal stimulus under Prime Minister Sanae Takaichi. Her first stimulus package could reach 17 trillion yen or more, exceeding last year's 13.9 trillion yen, raising concerns about Japan's already high public debt. Additionally, recent data showed the nation's economy shrank 1.8% in Q3. Although smaller than expected, this marked the first contraction in 6 quarters, driven by falling exports amid US tariffs and reinforcing expectations of increased government spending to support growth. Markets also speculated the BOJ may delay rate hikes as Takaichi is expected to advocate caution while advancing a larger than expected fiscal package. Her upcoming meeting with Bank of Japan Governor Kazuo Ueda is being closely watched for signals on the central bank's policy path and how authorities intend to manage fiscal expansion and currency pressures. So as you can see, 2020 is when we had one of the lowest rates in Japan's bond yields, which was a negative number, I believe negative 0.1%. But since that bottom, this was in 2019 August, all we have been seeing is an increase in Japanese government bond yields. So this means that while Japan's financial institutions were looking to invest in foreign bonds because their bonds were not yielding enough returns. Now we are seeing a very large increase, almost exponential. Currently 1.751% for the 10-year bond. But then you can also look at other long-dated bonds. For instance, you look at the 20-year bond. It's currently returning 2.79% in yields, and the 30-year 3.32% in yields. So this means that now Japan's bonds could attract a lot of investments from Japan's financial institutions. And this means that less money flowing to the rest of the global economy. Remember, for the last 2 decades, almost 3, a lot of finance in the global markets was flowing from Japan because the Japanese could not invest in their own bonds because the yields were basically curbed through a yield curve control program. But now that the yields are rising, the Japanese may not have the incentive to invest in foreign bonds. So as a result, you can see the lower demand across board. You can see the sell-off happening in European as well as American bonds, and this is causing some level of panic. And when you combine this with what's happening with investors taking profit, expressing caution, and rotating out of AI stocks, then you can see the full picture of what is really happening in the markets today. So other than that, the economic calendar seems a bit thin today. So we don't have a lot of things happening for the day. So yes, there's a couple of speeches. President Trump was speaking at 2 a.m. And Reserve Bank of Australia released their monetary policy meeting minutes at 3:30 a.m. We'll be seeing MPC member Peel speaking at 4 p.m. Canadian housing starts, factory orders from the US, and AHB housing market index, all low impact news. FOMC member Barr, GDT price index in New Zealand, FOMC member Barkin, MPC member Dingra, and federal budget balance, all happening within the same day, but we don't expect much of a volatility from these events on the calendar. So yes, yesterday we had news coming in from Canada, where trimmed CPI came in as expected at 3%, whereas median CPI was lower than expected at 2.9%, and common CPI at 2.7%, same as the prior number, indicating that inflation is subsiding somewhat in Canada, which may allow for more, let's say, rate cuts, even though we know that the Bank of Canada may hold for a bit before deciding to go for further rate cuts. So remember, for rate cuts in Canada, they already accelerated the rate cuts down to 2.25%. So further rate cuts might need a bit of a much stronger trigger. So going into Wednesday, of course, we'll be having quite a number of things happening. So early in the morning, we'll be getting the wage price index from Australia at 3:30 a.m. Then the inflation report from the UK at 10 a.m. We're expecting inflation to slow down to 3.5%, down from 3.8%, and core to 3.4%, down from 3.5%. So we'll also be getting inflation data from the Eurozone at 1 p.m. This we're expecting to be the same as the estimate, which is 2.4% for the final core, and for the overhead CPI to be 2.1% in the Eurozone. So we'll also be getting the FOMC meeting minutes at 10 p.m. Then on Thursday, we see the non-farm payrolls coming back into the markets again. So we haven't had the US non-farm payrolls for 2 months in a row. Then this report for the month of October will be coming out this Thursday. And the overall expectation is that the wage growth was at 0.3% in the prior month, and 58,000 jobs created in the US private sector or the non-farm sector, and unemployment rate is expected to remain the same at 4.3%. So this is expected to be the biggest event in the markets this week, basically giving investors as well as the Fed a view on the strength of the US labor market. So fast forward to Friday, this is when we'll be getting the S&P Global Flash Manufacturing and Services PMIs for a host of economies, and we'll be putting key focus on the Eurozone with French and German Flash Manufacturing PMI being the key highlights. We'll also be focusing on the UK, where we'll be getting the data at 12:30 p.m. And also we'll be getting the same data for the US at 5:45 p.m. So in between, we'll be getting core retail sales from Canada, which is a measure of the number of receipts that were made in the prior month in retail chains across the Canadian economy, which basically tells you about consumer purchasing power and beliefs about the Canadian economy. So clearly, it will be quite an eventful week, with today being a bit quiet, but all we are seeing is a big broad market sell-off. So the real question now becomes, how do you take advantage of this? How do you benefit when the market is this volatile and we are seeing extreme fear? So European markets set to slump at the open as AI worries return. So the UK's FTSE index is seen opening 1.1% lower, German's DAX in France 1.3%, and Italy's FTSE MIB down 1.27%. Regional markets look set to follow their global counterparts, lower after tech losses dragged Wall Street lower on Monday, with three major US indices closing in the red. The 30 stock Dow Jones Industrial Average plunged more than 550 points, or 1.2%, while the SP 500 and the Nasdaq Composite each lost around 0.9%. Investors stateside are awaiting delayed jobs data this week, as well as Nvidia's latest earnings report, which is due on Wednesday. So the chip maker, whose stock declined 2% yesterday, has been at the center of a debate about the strength of the artificial intelligence-powered market rally this year. Concerns have grown about weak market breadth, pricey tech valuations, and the soundness of AI fundamentals due to a boom in big tech debt offerings and the pace of AI chip depreciation. So Asia Pacific markets fell overnight, while US stock futures were little changed. In Europe on Tuesday, earnings come from Siemens Energy and Imperial Brands. There are no major data releases for the day. So that is it. That's the picture we have as of now. So let's see how these can be taken advantage of, especially given the increased volatility and the big sell-offs happening across board. So now I'm checking on the comment section. Remember, these sessions are usually open. So anytime you have a relevant question, feel free to drop it in the comment section. Even if you're watching this on X, I'll be able to see this and respond. Good morning, bro. This is Kiama Muturi. What's exciting as we approach last week of November? What's exciting is that a lot of things come with a Black Friday discount, including stocks. So if there is a stock you've been eyeing, it's most likely undergoing some form of sell-off. So you can buy it at a discount. And the same case applies to indices, gold, silver, as well as Bitcoin. So good morning, Lucy Njoki. Can see Jason in the house. I'm Kay. So MK seems to be panicking with the current set of events happening in Bitcoin. It's erasing almost everything. No, it's not. So we are just down hot, around 29%, almost 30%. This has happened a good number of times since Bitcoin's inception in 2009. And every time this has ever happened, in the following couple of months, Bitcoin has went ahead and printed a new high. So this should not be a very big concern. It's an opportunity to be looking for more entry opportunities. So good question. Do you still believe BTC could finish high for the previous years? It has always ended high. Well, there's a good chance that a lot of investors are buying right now at the current discounted prices, with the new low being $89,000 per Bitcoin. Just the other day, we were at $124,000 per Bitcoin. So a 30% discount is super attractive for a lot of investors. So the bounce will be strong and swift. So good request to check on USD Yen as well as the USD CAD currency pairs. So let's get on with it. So for those who are new, this is called the MetaTrader 5 trading application. This is the app that we use for trading. You can download it from FXPesa.com website. If you prefer trading using the mobile app, you can go search for Equity Trader from App Store or Play Store, or even download it directly from the FXPesa.com website. So as you can see, we have quite a number of things happening. So the number one chart here is a USD card. With the dollar being weak, you can see the Canadian dollar taking some strength out of it, and clearly for a chart that has been largely moving sideways in hot rooked like an inverted head and shoulder. What we are seeing here is a big jump down. So notice how at market open there was a gap down, we closed the gap, and now we are moving back in the same direction. So this indicates that we are moving back into the 2-day range that happened on Friday and Monday. And this implies that we could be finding support somewhere along the lower band, which was a support both on Friday and Monday around 1.40177. So other than that, there's other things happening in the market. For instance, if you look at the UK stock market, the FTSE 100 index, there has been a bit of a sell-off since last week, and this sell-off has went into lows that we did not think the market could break. So I want you to focus on the big sell-off that happened here, and when we got to key level support here, the market bounced immediately, went all the way back, traded sideways for a while, and then broke all the way down, still within the same day, and that's yesterday. Then today, the market knows that there is a very good support area here, dives straight through it, pretends to be going down, and now what we are seeing in the current hour is an instant reversal, which basically indicates a very strong entry by buyers, which implies that buyers are coming back into this market. So, well, on one hand, you can see indicators saying there is extreme fear in the market. All we are seeing here is opportunity, and the market's bouncing really hard. So this might be one of our best assets to trade for the day as we look to capitalize on the strong bounce. The prior 1-hour candlestick indicated a rejection of lower prices. The current one shows an acceleration and confirmation that buyers are entering. So short-term target is 96.38, and medium-term target for the day could be 96.88. So you look at the Japan's Nikkei 225 index, big sell-off happening across board. We had a key level support here. Market goes right straight through it, extends for 2 consecutive hours, and then for the following 2 hours recovers very quickly. So this indicates that buyers could be coming back into this market, and we could be seeing some form of recovery. So it's something similar to what happened here. You notice a very sharp drop. The next candlestick is a rejection. Let's try and visualize this. Rejection candlestick with a long tail towards the lower side, and the market recovers from there. So this could be what is playing out in the current setup, where the market was strongly moving down, and now you can see signs of buyers coming back. So you look at currencies, USD JPY, we know that there's a lot of issues happening with the yen. And as a result, we know that the yen has been weakening. And if you go to the daily time frame, the last time the USD JPY was trading here was in the month of February this year, and it seems like the yen keeps on weakening. So from the 15 minutes time frame, you'll notice that the yen had an attempt to strengthen against the dollar, but those attempts are met with more buying. So even though this seems to be a key level of support, which was previously serving as resistance, every time the market tries to break to the lower side, meets out of buyers, and it has been more of an attempt to break, and each attempt seems to be failing. So here we are looking at a market that is now bouncing and looking to head higher, even though we know that the new Prime Minister of Japan, the Ministry of Finance, and the Bank of Japan are currently considering some form of currency intervention, given how much the yen is weakening against the USD. So for now, that hasn't happened. So it's a scheduled meeting. So I assume that the yen will continue to weaken to the USD. So good chance that we move higher. So on the dollar trading against the Swiss franc, we have seen some good recovery from Friday last week in the afternoon, yesterday and today. So while the Swiss franc has been the strongest currency of the year among the majors, if you look at the daily time frame, this trend happened in the earlier months of the year. Here we are looking at the month of January, February, March, April, May, June. But then since the July 1st date, there seems to be more of a sideways momentum in this market than a trending market. So if you look at this high, this is the high that we saw in July, and this low here, this is the low that we saw in the month of June. It's safe to say that this market has stayed sideways for quite some good time. So this is the 4-hour chart. So we have been oscillating in between here. And now if you look at the current price action, it seems like the market had just bounced from the lower trend line and is now moving towards the upper trend line. So clearly, some kind of resistance seems to be applying at different levels. Sorry for that. So right now, it seems like the dollar Swiss franc just bounced from the lower trend line and is now moving higher. So from last week's low, it seems like the dollar is making some form of recovery. I don't know how much further this can go, but for today, it seems like we are headed right here, which is the high of day, as well as the high of yesterday. So very short-term movements for now until you have a clear path. So you look at euro dollar. We know that this has been the path of the euro dollar. So after breaking towards the upper side and pulling back, we expect some form of continuation as the euro continues to recover against the USD. So this continuation has been quite chaotic. If you look at the price action on Friday and then on Monday, there seems to be some form of weakening in the euro, but then some solid support around this area here. And this is yesterday's low. So even though the market is pulling back, the idea is that the euro continues strengthening and eventually closes the weekend gap here, which wasn't fully closed. Look at the pound. It's in some form of 4-day consolidation mode. Here, it has been basically moving up and down, bound by two particular trend lines. So at some point over the week, we should be expecting to see some form of a breakout. But for now, we continue trading within those boundaries. So we will be patient and wait for a potential break. If there's a break towards the upper side, it's a buy. Towards the lower side, is a sell. But then the idea is that we remain patient until that break happens. So for now, it seems more likely that the pound will be breaking towards the upper side. Of course, we know that this has been quite a path for pound USD. So yes, it has been losing to the dollar, but then we expect some form of recovery given the volatility we are seeing in the markets right now. So we go to AUD-USD. It's one currency that has bounced from a major or from a key level support. So this was the key level support here. Sorry for that. So this was the key level support, and since then we are seeing a very strong bounce, and the market is strongly moving higher. So yes, there's room for more upside given the current momentum. So also you have to consider the previous low here. So the market might be finding resistance around this area here, but overall it seems like a pretty strong bounce that could extend a little bit higher. So gold, I know this is a favorite for a lot of you guys. So despite really finding this area as a key level, resistance now turned into support. The lowest price that we saw on Friday, notice on Monday we breached, and today we breached even lower. But from the current price action, it seems like gold is not having it, and it's moving further back upwards. So you look at the trend line here from Friday to Monday, then you can see it clearly that gold is bouncing and heading to this area here along this particular trend line, and this seems to be the market structure for this week. And this is combining the Friday's low yesterday's low and today's low, which lies squarely on one line, indicating the strength of the support here and explaining the bull case for gold, looking to reach the upper trend line, which is around $4,069 per ounce of gold. So we go to silver. We had this pattern playing out on the 4-hour time frame, which was an inverted head and shoulder. Of course, we projected that the market would rally towards the previous high, which is what it did exactly last week. So topped there, and then there was a big sell-off in the afternoon on Thursday, and then a Friday, a big sell-off. Monday, we kept going down, and we bounced exactly at the neckline of our inverted head and shoulder. So after getting to this area, notice how immediately we had a pretty good bounce. And now we are getting a pattern that is so similar with what's happening in gold. So you look at this high session high, yesterday's highs, and today's price action, and it's pretty clear that silver is headed on to this particular resistance line. So very short-term price action. Yes, we're in some form of bearish channel, and the market is headed right back there on the upper trend line. So good chance that we get to squeeze in real fast. So you look at oil prices, also on some form of bearish channel. So last week we managed to capture the bounce on the lower side. So notice where we had discussed a very strong bounce from here. The market bounced as expected, rallied, but then started moving sideways. So just give me a sec. Thank you guys. Thank you for your patience. So we are back again. So after the strong bounce in Brent oil prices here last week on Thursday, on Friday we accelerated higher, but then the Friday's range, and by range I mean the difference between the high of day and the low of day on Friday, has determined the price action on Monday as well as today. So the market has literally not left that range that we saw on Friday. So even yesterday's price action, we closed the gap, moved further back downwards, and now it seems that we are most likely on a path up as the market remains within this range. So perhaps remaining within the range means price arraying back to $64.396 per barrel. So US equities, the Dow Jones 30. So for those of us who know what a liquidity sweep is, imagine some guy who was trading this market in the last 6 days and they had a buy trade. Most likely their stop loss was somewhere around this area or slightly below. So when the market had a big sell-off and it kept going down, they probably swept all the stop losses that were just below this area here. And that tends to have the opposite effect in the market. So after a liquidity sweep, you might see the market moving higher. So good chance that we see the market pumping a bit, perhaps getting into Friday's low or the low that we saw here during the London session yesterday. So a potential rally to this area here. That is to be confirmed, hasn't happened yet. So if you go to the H1 chart, you can see that the market is already attempting to show some green here. So sometimes when there's a big sell-off, the market will have some strong pullbacks. So it's not just about selling. Sometimes there will be pullbacks, but the overall trend and price action direction is downwards. So we've had 4 consecutive sessions of big sell-offs in the Dow Jones Industrial Index. And yes, we are looking forward to points of entry for bullish positions. But for now, we might be seeing the market pulling back a bit before continuing with the bearish momentum. So I don't believe the bearish momentum is over, but for now, there seems to be some form of strength coming back. So you go to the NASDAQ. we also know something more a bit about a liquidity sweep. And if you really look and you compare this area here and what has been happening here with Friday's low, you'd notice that I've marked the low that we saw here, the low on Friday, and today we have already spiked slightly below that and then immediately bounced. So this is quite common in a broad market sell-off, and now we are seeing the Nasdaq bouncing pretty strongly, and it's almost getting back to the open of day. The open of day was right here at 24,819 price level, and I expect this price to at least retest the open of day and perhaps accelerate higher. So this seems to be a case that is building up, and you can see evidence that buyers are coming right back. So from the H1 chart, this is how it looks like. And if you look at the SP 500, it's the same story where anyone who had a stop loss around this here seems to have been wiped out, and the market seems to be accelerating higher. So we go to a smaller time frame, like the 15 minutes chart, then you can see potentially the SP 500 going for the high of day, and this means potentially getting to 6,688 price action level. So Bitcoin has been the basket case of the day, hitting $89,266 per Bitcoin. So while this might be felt as market-wide panic, it's not something that is entirely new to Bitcoin. So you go to the weekly chart, you'll notice that we have had this movement over and over and over again. And every time this happens, we see the market proceeding to form a new high. So in the last dip that we saw here, this was in the year 2024. It was about 33% drop. And immediately after that, what we saw was the market basically collecting from the lows and forming a new high, rising 119%. So you look at this year, this was during the month of February. Bitcoin's price dropped by around 32%, and after dropping 32%, price went ahead and rallied by 68%. And now we have yet another dip. So a dip is a gift. Here down 29%, and this means that we are likely to see yet another rally from these levels, perhaps even moving 50-60% from there. So every dip is a gift. That has been the story of Bitcoin. The last bear market we had was about 77%, and this was in the year 2021. This is when Bitcoin dropped to about $15,000. And for those who understood the assignment, you can see how they got over 700 returns within a span of 3 years. So that's the volatility and absolute normal for Bitcoin. So today you can already see price bouncing strongly. Right now it's up around $2,000 in the last 1.5 hours, in the last 2 hours actually, and there seems to be more bullish momentum building up as investors take advantage of the cheap discounted prices. So the dollar index has been on some form of recovery from Friday's low. Notice how in the afternoon we rallied Monday and today, but then that doesn't take us out of the blues. It shows the dollar index has been pretty much resilient, given that for the better part of the year it has been on the losing side. So here we are seeing the dollar index being on a path to recovery rather than on a sell-off, and that may explain why some of the currencies are suffering to the dollar. So New Zealand USD, we expected a big rally from here last week. That did not play out as expected. So we had these pullbacks playing out, and now if we clean our chart and we really look at what's really happening here, we can see that this was a key level resistance last week. A key level support on a couple of days last week was around here, and today we already breached through that. So 2 weeks ago, that was the bottom. And if you look at the 15 minutes chart today, if there was some form of liquidity here, it has already been wiped and the market reversed and moved higher. So good chance that we see the New Zealand dollar continue to recover against the USD and perhaps even move towards the resistance we saw yesterday as well as Friday. So the German stock market index also having a big sell-off is seemingly attempting to get some kind of support. So this was the key level resistance, support, and the market drove right through it. But then what we are seeing after driving right through it is an immediate reaction in the market and price moving back upwards. So this seems to be a consistent theme across all the markets that have had some form of panic. You look at the EU 50, long tails happening across the last couple of candlesticks, indicating lower prices being rejected. This can only mean one thing: buyers are attempting to come back. You look at the France 40, last 2 hours have been rejecting lower prices. Look at the Swiss 20 stock market index. After a big jump lower, we crossed the gap and are moving higher. So yes, well, the majority of the news you'll be seeing on various media stations, mostly news reporting about what happens in the markets yesterday. We do not trade yesterday, we trade what we see now. And what I'm seeing personally is markets that had a big sell-off but now are attempting to come back. So notice the big gap here from the closing price yesterday to the opening price today in the Norway 25 index. Now we are seeing bullishness coming back. You look at the Netherlands 25 index, and there was a big gap as of this morning. Closing price yesterday, opening price is lower, and now the market is attempting to come back. So yes, there seems to be some form of recovery coming in the markets. So for pound yen, we all know what happens with this pair. It's usually very volatile, and given the weaknesses we are seeing in the yen, it seems like there's still more room for upside potential for upside momentum in pound yen. Even though we had reached a major resistance area right here, which is now preceded by another resistance area up there. So from here, after attempting to break yesterday, pulling back, there seems to be an attempt to continue with the bullish momentum that might eventually play out later today. So in summary, well, the stock market seems to be in an extreme sell-off, and there seems to be panic in the market. Some investors seems to be taking advantage, and the markets are likely bouncing from these lows. So you look at silver, a very strong bounce. You look at gold, a very strong bounce, which seems like a kicker of confidence in the markets for me today. Look at Nikkei 225 index, UK 100. They all seem to be indicating some form of bounce. So this can sometimes be what we call a dead cat bounce, where the market attempts to bounce, traps buyers, and then continues with the strong bearish momentum. But that seems likely not the case. For instance, if you look at the German stock market index, it can't be the case that all markets are bouncing at the same time. So more likelihood that the markets are bouncing from these levels. So if you are not very confident about it, perhaps give it some more time, because there's still more room for recovery. You don't have to jump the gun. So let's wait and see. And for instance, for gold, while this might be a very short-term rally, the real kicker is if gold breaks above this, which would likely imply that we have already bottomed and we are moving higher. So the same thing applies to assets like silver. So for instance, if silver was to breach this area here and now move higher, then it would imply that this sell-off is over and now we are on a path to recovery. So we have seen this happen again and again. So the last time this happened was this bottom here, and since then the market kept moving higher. So if that be the case, then that would likely mean opportunities to buy. So patience is the name of the game here. So just checking the comment section as we approach the end of our presentation today. So there's a question about premium accounts. I think that is pretty much well explained on the FXPesa.com website. Mhm. Just give me a sec and start to show. Yeah, so this is the FXPesa website. So we know we have two types of accounts. We have a standard and a premier account. So the standard account is zero commission, so you don't pay commissions, but the spreads are high, so you pay an average of 1.4 pips per trade. Then for premier accounts, the spreads start from 0.0 pips. You get the maximum uh, low or maximum best pricing from the market, but then you will pay a commission for each trade, which is usually $3.5 per lot per side, or basically $7 per trade. If you trade one lot in gold, you'll be paying $7. So if you trade 0.1 lots, you'll be paying $0.7. If you trade 0.01, then you'll be paying $0.07 per trade, which is pretty cheap for me. So the other things are the same. Leverage is the same. MT4, MT5, MQ trader, equity trader, mobile, desktop, tablet compatible, advanced market analytics, live market news. That's the only difference. The only difference is on one side you pay a higher PIP, no commissions. On this other side, you get market best pricing and you pay a commission per trade. That's the only difference. I hope that explains it. We already analyzed USD, JPY, and USD card. Thank you for the request. Can you probably paint a picture of USA defaulting on its loan? And is this possible? It's impossible for the US government to default on its debts. This is the one economy that is able to print trillions of dollars within a couple of weeks. We have seen it happen during COVID. Since Trump became president, he has already spent over $2 trillion. So it's impossible. It's a thought that lives in the fantasy world or in economic halls where we talk about long-term impacts of certain policies. But in the short run, this should not be a concern of your trading activity. Uh, it's a neighbor's kid who was knocking. Don't know why they like knocking on our door. So did the US government already flagged off the use of cryptocurrency in international transactions? No, they are currently laying the groundwork, the framework, the regulations. We also the passing of the Genius Act earlier in the year. More and more crypto companies are getting licenses to list their ETFs. There is a lot more happening in the regulation world than in the implementation world. So, good question from Shane Atieno. What's the relationship between inflation data and the central bank? So, the thing is, when inflation is on the rise and it goes to abnormally high levels, it's an indication that prices are on the rise in an economy. And in that case, it's usually negative for the currency. If inflation is on the drop and it gets to deflation territory, then that is usually interpreted as a positive for the currency. On the other hand, if inflation is around the central bank target or slightly higher or lower, then we interpret it differently. What we interpret is the big determiner of the currency direction or the price of money, which is usually the central bank in any economy. So we know that these central banks have mandates. On one side is to maintain stable prices, and on the other side are full employment, while some other central banks have a tertiary mandate of maintaining economic growth. So the main focus for central banks is usually stable prices. And CPI inflation data is a measure of whether prices are stable or not. So CPI inflation measures the rate at which prices change in an economy on aggregate, though it can be challenged as ineffective in measuring the overall impact on people's lives. Central banks tend to use this data frequently. So if inflation is on the rise, central banks tend to hike interest rates, and if inflation is falling, they will tend to cut interest rates. So since the 2021 inflation highs across major economies, inflation has been on the drop, moving further back downwards, and then stabilizing around 3% for the US economy and Japan for the last 1 year. And the central banks have been trying to push this towards 2%. So when inflation is on the drop, central banks will eliminate earlier rate hikes. So they basically cut interest rates. So when we're interpreting this information, we do it from the perspective of a central bank. So for instance, on the next US CPI report, if inflation is dropping towards, let's say, 2% target, then we know that the Fed has more room to cut interest rates, and that weakens the dollar. On the other hand, if inflation is on the rise again, that limits the central bank's ability to cut interest rates, and that has the opposite effect, which is basically strengthening the USD. So we look at it from that lens, in that when the Fed sees this data, how are they going to act? Are they going to cut interest rates or hike interest rates? And that advises our buyers in the forex trading market. I hope that answers your question. What's the market expectations considering the government shutdown was over, but we are still experiencing market uncertainty? So there has been a lot of investors who are rotating out of AI stocks. They feel that the AI stocks are overvalued. And with this happening, there is a market-wide panic with a lot of investors selling their entire stakes in big companies like Nvidia, Palantir, and so on, and Tesla. We saw the latest being the Amazon's founder basically selling a big chunk of his stock in Nvidia, and this is ahead of Wednesday's earnings. So the market is basically questioning the capital expenditure happening in AI and AI infrastructure, and as a result, we are seeing a broad market sell-off. But then these companies are still strong and bound to do well in the near future. So while on one side there is a market-wide panic selling, we should be seeing other investors taking advantage of this and buying at these discounted prices. The market always has checks and balances, and we should be seeing them happening across board. So for those who are new, you should know that we have a podcast called the Bullish Banter Podcast, where we get to talk about trading strategies, risk management approaches. We get to interview other traders and basically generally talk about what's happening in the markets. And in our latest episodes, we covered a very experienced trader called Joseph Miner, from Forex beginner in 2016 to mentor and risk management expert. So make sure to check it out. It's available on FXPesa YouTube as well as all other podcast streaming platforms. So make sure to check it out, and we appreciate any feedback and reviews that you leave us. And see Boniface Watahi already in the house. We already did pound yen. Thank you. Anything about the UK budget Reeves seem to abandon the hike on income tax will. Okay, I don't understand this comment. Seems to be, I don't know. So yes, there are fiscal rules in the UK. Rachel Reeves is a bit aggressive. That's the UK Chancellor or Minister of Finance. Treasury. So we are basically seeing the Treasury Secretary going for a very huge increment in the UK budget in order to support social programs. And this is expected to hurt the UK economy with higher taxes, and you can already see this being reflected in the broader market sell-off in the UK 100, and the pound also seems weak as a result of this information. So yes, income taxes are being raided in the UK, and it depends on how the House votes on the budget. So, good question from Sean. Why is it that there are fluctuations with the DXY and the cash shilling is still trading at the same levels? Well, there's an unofficial peg by the Central Bank of Kenya where anytime the cash shilling strengthens, they basically sells more in the interbank market, and this maintains the peg at 129.5. And anytime you see the opposite, the cash shillings attempting to weaken, then the central bank injects dollars into the in the interbank market, buys the excess cash shillings out of the interbank market, maintains the rate at the exact level 129.5. So yes, it's currency intervention to try and maintain the peg at the current level. So it's a common thing across major central banks. While some other central banks allow the market to do it freely, some other central banks that are impacted by rate changes, especially in their debt outlook, they might be taking a keen interest in maintaining their currencies at a certain stable value. So that is it for the day. If you don't have a trading account, check out the links in the description below. If you're watching this on X, visit FXPesa, FXPesa official handle. And then from there, you'll find the links to registration. We have free classes happening on Zoom from our academy. Make sure to register and sign up using the link in bio. And on top of that, if you really want to start your trading journey and you don't know where to get the information, then check out the Novice to Pro course. It's available on FXPesa YouTube. Learn with self-paced learning. If you want a guide on one-on-one, then visit our social media handles, FXPesa on TikTok, FXPesa on Instagram, and FXPesa official on Twitter. From the link in bio, you'll be able to sign up for our Zoom classes. They are free of charge. They happen daily, and you're able to learn from the basics, from what is Forex. You build that skill, and once you build it, you come back to these market snapshots, which happen daily, Monday to Friday, where we discuss the events of the day. What are we expecting in the markets today? What are the likely outcomes? Where are the opportunities? And from there, you're able to make money from the markets. So that is it for the day. Enjoy the rest of your day. I hope you have a peaceful and enjoyable day. And lastly, to our listeners who attended our first Bullish Banter event last week on Friday, I am so grateful. I have nothing but thanks to you. Thank you guys and enjoy the rest of your day.